Welcome to Coleman Report Live. I'm Bob Coleman. We're talking Main Street small business lenders who help it grow. Joseph Coleman, live from Philadelphia, wrapping up America East. John Winnick out of Chicago. Loan portfolio analyst extraordinaire. How's that to describe what you do these days?
That's a little too much, but I'll accept it.
You'll take it. You'll take it. So Joseph, let's see. Let's go right to the end of America East. I want to start with your overall impressions of it.
Excellent show. We had a great reception last night, sponsored by Ethan from Starfield and Smith and Neil Patel, our old friends that we haven't seen for 2 years, it seems like. They had a great party up on the 52nd floor of the BNY Mellon.
I want to talk about parties. I want to talk about content.
Well, we wrapped up today with, well, first of all, yesterday was great with a great discussion about the 504 refinance. Linda Riley was here. She's the chief 504 representative from SBA. And Greg, her number 2, was here as well. And our old friend Eddie Tubin, he was on the panel as well. So he came up and they gave a great summary. This information came out I think the July 29th was when they released it, but this was their first time publicly talking about it and giving the lending community the details that, really answered a lot of questions. Great way to wrap up. That was yesterday, and then today was secondary market with John Wade, our old friend John, who I've been told many times is supposed to retire, but they won't let him, and so he's still sticking around. And the last was the new FTA Guidehouse took over Coleman, and they went over the transition details and how that is really going pretty smooth since April that really started, and now they're wrapping up the end of that transition. So excellent show. Yeah.
Good. I was going to say, for those of you who don't know who John is, he's the liaison between SBA and the lenders, and it's the secondary market specialist, works with the FTAs, and he works with John, Bob Judge, a lot of other people, and he's excellent and stuff. Yeah, we're lucky to still have him around. So John, I know they keep sucking you back in. Hey, John Winnick, we brought you in. Talk to us about debt refi. I know you get involved with these purchases of the first, and that's the opportunity for the lenders, right? Is they make these first lien loans on 504s, and then they can sell them. Go walk through that, and why is refi so important for us?
Yeah, I mean, I think first thematically, the 7A program, or as some call it, the flagship SBA lending program. So much of the changes post-COVID have been to 7A's benefit, and I think the improvement in the 504 refinance product really helps level the playing field for what usually is the better product for the customer. I think one of the key changes was, CDCs are really limited on how much 504 refi period they could do in their portfolio. And, this really opens up the product. I mean, I think there's just a handful of kind of significant changes. I mean, if you already have a working knowledge of 504 refinance, I'll just sort of touch on a couple.
Please.
The 504 refi with expansion, let's talk about that first. The amount of existing indebtedness that may be refinanced as part of a 504 project was limited previously to 50%, and now it can be up to 100%. Mm-hmm. That's a big change, which will allow more projects to fill. Now, if there's an expansion, 504, that's a refi with expansion. Without an expansion, couple technical changes. The loan secured by eligible fixed assets used to be 6 months. It was now, it used to be 2 years. Now it's got to be at least 6 months. When the loan was occurred, used to be 2 years. Now it's got to be at least 6 months. So it's easier now to refinance younger 504 debt. And you can refinance other federal guarantee debt. Previously, you couldn't refinance 7A and 504s. And that's a big deal because obviously with the favorable interest rate environment right now, there were borrowers who had attractive leverage, but the 504 rate was above market. And now they, in theory, can get that to market. The curious change that maybe I'm a little skeptical about is there used to be a requirement that the borrower had to be current for 12 months of debt payments on the debt that was being refinanced, and that was thrown away. I wonder if that could lead to, a worse subsidy rate from the lender standpoint, but that was the one thing that I thought.
Let's go through some logistics. The CDC cannot approve these loans. They have to be approved through Sacramento, correct?
That's my understanding. I can't say I'm the guy that knows all the,
Right, I understand that.
approval process.
My understanding is so that's another set of eyes in terms of hopefully that mitigates bad loans going through, which will impact negatively the subsidy rate. Touch very briefly, the reason why we like these loans are fixed rate, 25-year, fully amortized, one of the lowest rates ever in the history of the program. What was it, 2.8 last month, John?
Yeah.
I could pull that up.
I mean that's phenomenal. Tell us about the first, though. I'm a credit union, and I want to do one of these loans, and obviously the second is done by the CDC, funded by Wall Street. How can I structure the first?
Yeah, I mean, I did find out earlier this month that another player is entering the 504 first secondary market. So that's certainly healthy. To the extent that you want to monetize that first mortgage, there's never been a time where banks were stuck with more cash and nowhere to put it. So my general advice to really all banks is, if there's anything you want to sell in the next year and a half, do it now. So certainly there's an abundance of buyers for really everything, and the pricing is quite attractive.
And it's fair market. It's not regulated by the SBA, correct?
No, I mean it's SBA. I guess the only issue is making sure the buyer is aware of the third-party lender agreement. I have seen circumstances where they never knew, and the loan went into default, and they were unintentionally violating it. But aside from that, I mean, the only thing you have to understand is inheriting that third-party lender agreement.
Premium on these loans, John. What are you seeing?
Well, I mean, I think, look, I mean, the 504 secondary market is somewhat inefficient if it's solely defined by the parties that have raised their hand and said they're in this market, right? And if you took every single 504 loan and submitted it to Zions and others, my guess is only a fraction of those loans would get purchased by somebody. Now, what we typically do on our side is we do competitive processes where those players are involved, but a whole laundry list of credit unions, community banks, and others. And, pricing can vary from, 103 to 107. Certainly the best secondary market premiums out there are going to be the established players, but again, they're only doing a fraction of the market.
Right. Very good. Anything else on 504 refi that we should know about, Joseph?
Just the form changes that came out, Form 1244. E-Trend has been updated, so I have attached that new form. Download it and keep it for your records. And yeah, that's really it on my end. So.
Well, let's try. Great, John. I appreciate your feedback.
Oh, there was a great case study. I've included also in the handout the summary from Linda Riley. So those are the notes. Download that. That's great information. And then this is a case study on a debt refinance provided by Business Finance Group during their presentation, and it really shows how good this is for the borrower and the lender. So check those out, and yeah.
Yeah, the CDC, the Summer Corps 504, whose board I chair, Margaret Griffin sent over a presentation, which I'll forward to you guys. But CDCs around the country have been putting together some great webinars and training, and I encourage you to participate.
We'll talk about a win-win on this particular case. You lower the payments by $8,000 and you have enough to hire 28 more people. So
yeah,
talk about a great program for Main Street. So that's good. Yes, take a look at, there's 8 great case studies. Take a look at that. You can get an idea of what's happening. Let's see. Let's see if we can play the video by Jennifer. Joseph, let's do that now.
Happy to be here, of course, support the small business lending community. I am a small business owner myself, so I appreciate all that you all do. I, myself and my team have worked hard to kind of bring this to fruition, bring people back together. Here, 250 plus in person, 90 plus virtually. So, I think that turnout's pretty good. The sessions have been going great. We had John Miller gave the Office of Capital Access update. Of course, Diana Seaborn gave the OFA update, and Rosemary Drake, Linda Riley was there. We heard from International Trade, and then tomorrow we hear from the fiscal transfer agent, so Guidehouse being the new FTA. We've got MALC coming up, the Mid-America Lenders Conference in Arlington, so we expect an even better turnout for that.
Absolutely,
we have about 300 plus in person as of now. We expect some additional in person. We will have a virtual component there as well, just for those who are still a little bit, shy to kind of really get out there. But yeah, so after MALC, we've got Flagle in Orlando. We have in Detroit, we have the Great Lakes Lenders Conference. And we, of course, have the Kentucky Small Business Lenders in Louisville.
All right, great.
That
was a nice video. Good job. I particularly liked how the wine bottles were positioned in the center of the...
I know, and the champagne bottles popping behind it. Yeah, it was a bit rowdy.
Subliminal advertising.
I set up this interview area, and then they set up the
wine
right next to my booth. But anyways, Jennifer, thank you very much for having me, and I had a great time. So it was excellent.
Real quick, John, I want to thank you. That was great. We're going to try to do more and more of those as the technology gets better. But good interview, and good job for you, Jennifer. Real quick, John, what is your what I'd like about reading the band report? And if you don't do that, get a hold of John, send me an email, and I'll forward it over to him. It's the bank asset network report. John does a great job writing that every week. I don't want to hear doom and gloom, but are we heading down the path of doom and gloom?
Yeah, well, look, I think loan growth, at least amongst the banks in general, was curiously bad in the second quarter because the economy, grew at a very high rate. Normally, economic growth and loan growth go hand in hand. It does appear that the loan growth picture has improved significantly. Kind of hearing it from banks and their SBA origination, seeing it at the CDC next door. But you're hearing kind of two things from the Fed survey. One, underwriting standards are either stabilized or getting looser, and demand is either stable or getting better. So pretty much across the board, there's improvement in loan demand. Anecdotally, we're hearing a lot of large C&I customers that are setting up new credit lines that they anticipate using for big purchases, acquisitions, and so on. So I think the loan growth picture is going to be significantly better the second half of the year. Regarding sort of the negative, I mean, I think that, back in May, there was probably a thought that,
Muted.
completely eliminate COVID. I think the fact that the variants, the Delta variant, is evading the vaccines to some extent, although it's still preventing death and hospitalization in most cases, is certainly a concern. I mean, it's good to see that there's 300 people at this conference. I would not be booking non-refundable hotels for conferences 30 days from now. We have a conference in Chicago in September 13th or so, and I have a $100 bet I hope to lose. That's not going to happen, but I'm hoping it does happen. But,
Yeah, very good.
Well, yeah, Jennifer talked about the virtual component. I mean, the whole audience was watching a Zoom call with Diana Seaborn and John Miller. That's I think, going to become a reality for the near future. Absolutely.
Yeah, I mean, I've seen, I went to an early conference in May, and they didn't even contemplate a virtual option. So people definitely want to get together and mingle. I think there's no question of that. But obviously, when the case counts are jumping as much as they are.
But John, you were one of the early adapters to go back to business traveling. Are you still being aggressive on that, or are you hunkering down?
I pulled back a little bit, more so than I don't think people are. I don't want to push something. So yeah, I mean, I'm being a little bit more selective than I was
We're
a while
prudent.
back.
Yeah.
I mean, I've done 2 flights in the past 3 weeks, and knock on wood, I haven't had a significant delay. But going to the airport right now is very unpleasant.
As Joseph's going to find out also this evening. We have our webinar coming up at the top of the hour. It's not too late to register. Just send me an email. Send it to me. Joseph's going to be in transit on projections and global cash flow for SBA. That's going to be and just send me an email. We'll do the paperwork. Next week, we're going to be doing credit memos over $350,000. And the Wednesday after Labor Day, we're going to have Marty Techler in here. We're going to be talking about SBICs. Do you get involved with that at all, John?
I don't. I mean, I'm certainly aware of the program, but no.
So that's it. And our training, our online training is available. Please take advantage of that. I know everyone's busy though, but we've had great response on that, and thank you for your support on that. John, thank you very much for your time. Joseph, travel safe.
Thank you, guys.
You're going to be back tomorrow, Joseph?
Yeah. I get in late tonight, so I'll be back on the show.
Assuming United is doesn't route you somewhere else. Thank you for joining us today for Coleman Report Live and for supporting America's Main Street, one entrepreneur at a time.